Hey, it's Leo. So how about I give you a tool that you can use to determine when a squeeze or any parabolic move on any asset has likely ended, instead of just relying on someone's opinion on the internet. The truth is, nobody knows how high price on any asset could possibly go. Oftentimes in markets, it will go far beyond whatever you expected it could have gone. So go to tradingview.com, open up a chart, and go to indicators. You're going to look for Bollinger Band. It's going to be this one. Click on it. Click it 3 times so you have 3 of them on the chart. You're going to right click on the Bollinger Band itself. Go to settings, change the length to 50. Leave the first one standard deviation to 2. Go to style. I like to change the color to yellow for the first one. I'm going to go ahead and remove it from the chart now. All right, so there's my first one. I keep my second one as blue and right click it. What you'll notice the difference here is that, so the length stays the same as 50. The standard deviation goes up 1 to 3, and then the next Bollinger Band would have a deviation of 4. So this would be the one with the 4th period deviation. Now what Bollinger Bands do is they measure the volatility in an asset. So whenever you go into a squeeze, you're going to see a spike in volatility. And what this is doing is it's measuring volatility, but it's also showing you the momentum. Now, if it starts trending sideways and moves outside of the Bollinger Bands, that's a sign of loss of momentum. It means that the squeeze itself it's lost its momentum. It's very likely that the shorts are not covering anymore if it starts to do that. If this trend were to have continued, what you would expect is that the Bollinger Bands continue to expand and price continues making higher, and very likely the price would be staying between the red and blue Bollinger Bands, possibly even the yellow. What you don't want to see is a move outside of the yellow Bollinger Band, and it's to start trading sideways, because that's a sign that it's lost momentum. Now I just switched over to GME's chart, and this is why I think it's important to take profits as price goes higher, because what you can have happen is, yes, price stays within the Bollinger Bands, but here it just drops straight down. Once it peaked, that was it, and it just went down. We're on the same time frame chart as AMC, but it didn't give you that little bounce where I would be looking to exit the rest of my position. So this tool isn't going to change my brackets. I'm still going to be looking to take profits on the way up as price goes. This is going to be, I'm going to be thinking of this as a red flag indicator. So let's say I haven't gotten to my last bracket up here, and I see that price is losing momentum. There's a good strong sign that the squeeze has ended. Then I'll just close out the rest of my position. Especially if I've already made a very nice profit and I'm very happy with that and I don't want to give it back, and I'm seeing a sign of losing momentum within the squeeze, I'm just going to close out and be done with it and be happy with whatever it is that I had gotten. So take this for what it's worth. It is worth noting that this works best on moves that are very parabolic, going straight up. If you run into a more gradual move where price is kind of doing this, a very slow grind over the course of many, many months, then this method would not work. This method would work best if it's just a straight parabolic move up, they cover, and then it's going to go back down. So in very slower trending markets, which you typically don't see within a squeeze trade, it's not very useful at all. So until next time, I'll talk to y'all soon.